The Egyptian pound is here at 15.78%, a negative 0.18%. A bit of some pressure for some of these currencies, which we'll talk about a bit on the program now, as we see the king of currencies, the US dollar, been pressured for nearly 2 months, but that is slowly changing as the greenback started to rebound in the past 1 week. So what does a stronger dollar mean, and for who? Let's chat to Lukman Otunuga, who is a senior research analyst at FXTM in London. Good evening, Lukman. It's good to see you again, my friend.
Good evening. It's always a pleasure. Thank you for having me on today.
What's your take on the US dollar rebound, and what's the driving force behind it?
Yeah, after the dollar's been beaten black and blue over the past few months, we've seen the king of the commodity markets developing some strength from last Friday's upbeat US jobs report, which showed a surprising increase in unemployment rate. Unemployment rate printed at 8.4% compared to the 9.8% prediction, and this simply boosted confidence over the health of the largest economy in the world. Other drivers that seem to be pushing the dollar higher is the fact that we have a sense of optimism over a possible breakthrough with COVID-19 vaccine. At the same time, the Fed has relaxed its inflation target, allowing the US economy to run hotter than normal, meaning that there's a possibility that the US could actually recover quicker than expected. And these three things are all coming together and pushing the dollar against G10 currencies, emerging market currencies, and Asian currencies. However, though, we just need to look at the dollar's performance in this quarter, and you can see that it still remains quite depressed against most currencies. And this short-term rebound is likely to be short-lived, especially when we consider the other negative factors hitting the US economy, markedly COVID-19 and the political uncertainty ahead of November's presidential election.
So who benefits from a stronger dollar?
Well, the biggest winner here from a stronger dollar is U.S. consumers. You know, a stronger dollar increases their purchasing power. You know, it allows them to purchase foreign goods at a cheaper rate. Consumption is an engine of growth for the U.S. economy, so naturally, this feeds back to the U.S. economy. Another winner from a stronger dollar, of course, is those domestic companies who receive their profits in dollars. These are the two key winners from a dollar. Everyone else is actually a loser, including emerging markets, Asian currencies, and also commodities.
So what are the key drivers for the currencies market as we start the new week? What are we taking on board from last week?
Yep, so we've got two key drivers. Number one is COVID-19. Naturally, we're seeing rising COVID cases in European countries and the largest economy in the world, the United States. Also, we still have that U.S. fiscal stimulus stalemate back in Congress. Now, that positive U.S. jobs report that we saw on Friday is now raising concerns whether, there's enough credibility, there's enough on the paper for them to move ahead with that stimulus. On the data front, though, this is a big week for markets. We have Euro area and Japan GDP. Earlier we said also we have South Africa GDP, which will result in a lot of volatility in Iran. ECB meeting on Thursday, and US inflation and UK GDP on Friday. So there's a lot on the plate this week, which will translate to volatility across not only G10 currencies, but Asian and emerging market currencies.
So if I'm in the market right now, what's the strongest trading action? Is it developed markets, is it emerging, or is it frontier markets?
I was spending more day looking at this, and I have to say that the strongest action is in developed markets. There's two black horses, that are currently creating a lot of volatility. Number one, of course, is the British pound. The British pound has tumbled against the dollar and most G10 currencies today after the news we had in the UK of Boris Johnson threatening to walk away from Brexit talks if a deal was not secured by October the 15th. Now, the reason why this is really hitting the British pound is because the UK economy is not in a good place right now. As living in the UK, we've experienced the first recession, first time in 11 years. Now, to have Brexit on top of this is, creating a lot of uncertainty. And the other developed currency that is getting a lot of action is the euro. The euro is actually one of the best performing G10 currencies year to date, despite rising COVID cases in parts of Europe. I think the euro continues to benefit that most people feel that, compared to the United States and UK, it's one of the developed countries that's able to really pull a hold on COVID-19 compared to the rest.
I'm looking at the pound at about 1.31 on the dollar, euro 1.18. It doesn't look like it's a rapid decline against the dollar, as it were. So the pound is still above the 1.3 handle. So it's still relatively strong despite the threat to walk away from the Brexit deal. Do you think the ECB decisions this week and some of these economic data will give some strength back to the pound and the euro?
Certainly. I think one key thing, especially with the British pound, we've seen is, especially when I've been following Brexit for the past 4 years. It's been 4 years since the UK now really voted to leave the European Union. Almost 9 months since we've officially left the EU, and nothing has changed. It's the same back and forth, a lot of uncertainty. Nothing much has been done, and this is creating a sense of complacency, which is, most people still haven't really priced in the fact that the UK may actually crash out of the European Union by the end of 2020 with no deal. I think that reality is enough to create explosive levels of volatility in the British pound. With the ECB meeting this week, the European Central Bank is not expected to change monetary policy. However, though, when we look at the low levels of inflation in Europe and the fact that the euro is really appreciating against the dollar and other currencies, we have to keep in mind that euro is an exporter, especially in Germany. The European economy needs a weak euro to support that economic growth. So I think on Thursday we may see a case where the ECB government may try to talk down the value of the euro. So this is going to be a very interesting development this week.
It's going to be interesting to see if you turn down the tune of the euro, then you're looking at between Germany and France. What happens there? Just try to stimulate the economy, as it were. So, Doc, let's talk about the SA Rand very quickly. What's your take on this? How much beating do you think the Rand will take when the GDP numbers come out tomorrow? Or has it been priced in already?
I think with the South African Rand, what we're seeing, especially the valuation, interestingly, this quarter, the Rand hasn't performed too badly. It's emerging market, it's a proxy for emerging market risk, and it tends to be influenced by external developments primarily, then after developments happening in South Africa. But South African economy has been through a lot over the past few months. Not only is it dealing with rising COVID cases, it's still trying to nurse those deep wounds inflicted from the first round of lockdowns, really shaky economic fundamentals, and the fact that the SARB has cut interest rates 5 times this year. So lower interest rates is also reducing that interest rate differential between the Rand and other countries. The GDP tomorrow is going to be really significant, and it's going to really shape the outlook for the South African economy. There's a lot of gloomy predictions out there, but what I can say is it's a lot of uncertainty, but whatever the GDP, if it's really below that gloomy market expectations, expect the South African Rand to weaken considerably, not only against other G10 Asian currencies, but also in the emerging market space.
So which currencies am I looking up to now as for carry trade in Frontier Africa?
It's funny you say that because originally, when we're speaking about carry trade, we look at the South African Rand. It's one of those, not only is it a proxy for emerging market risk, due to its nature, it was one of the picks for a carry trade. But keeping in mind how interest rates in South Africa are no longer 6.5%, it's been cut to below 4%. Then the next destination for a carry trade, interestingly, could be the Nigerian naira. If you look at interest rates in Nigeria, it's still relatively high. The CBN hasn't really cut interest rates that much compared to other emerging market currencies. So this could be the next destination for carry trade. But as I said, we need to look at the domestic conditions in the Nigerian economy because Nigeria is also dealing with its own internal risks.
So what's the near to medium-term outlook for the Naira then?
So we've actually seen the Naira roar back to life in September. You highlighted it earlier. The CBN, auctioning, the auction that actually has taken place today. What is really pushing the Naira higher is the fact that we have a more dollar liquidity in the markets. But when we're looking at Nigeria, I think we've spoken about this many times. It's the same story. Nigeria still remains exposed to external risks, namely oil price volatility, and the outlook for oil remains depressed thanks to COVID-19. Now, given how a handsome chunk of government earnings and export earnings are from oil, as long as oil remains depressed, this is going to wear on the Nigerian economy. It's going to create more dollar scarcity, and it will be reflected in the Naira's valuation in the rest of 2020. So in the short term, this development could, in regards to CBN auctioning more dollars, could help the Naira, but medium to longer term is the same old story until Nigeria is able to really diversify away from the chains of oil reliance, to other more sustainable sources of growth, i.e. agriculture. Expect to see the Naira continue to weaken in the medium to longer term.
Yeah, but when you look at between Goldman Sachs and the Russian energy minister, 50, 55, 65, if you stay somewhere in the middle, is that a safety net for Nigeria enough at least to get through the rest of the year?
They've been highly optimistic with the outlook of oil. I don't blame them. As I said, I've seen pockets of positive economic data for major economies, and this is fueling that sense of optimism that the worst of COVID-19 could be truly behind us, and the world economy could recover. Even OPEC officials were saying that oil demand could rise back to pre-COVID levels, 95%. Overall, though, I think the outlook for oil remains extremely shaky.
I love all the optimism. I love all the optimism. Let's just turn to reality somehow. Again, Felix Otunuga, thank you so much. Great insight from FXTM Senior Research Analyst. Have a pleasant evening.